Welcome to the deep dive. Today, we're really embarking on an exciting deep dive into the very dynamic world of Bitcoin using the source material you've given us.
That's right. Lots to unpack there.
Absolutely. Our mission, really, is to unpack the story behind Bitcoin's recent impressive ascent. We'll focus on, let's say, three key areas. Those massive institutional inflows we've seen.
It's huge numbers.
Exactly. Then it's remarkable resilience, even when things get volatile.
Which they certainly did.
And finally, the shifting regulatory landscape, which is undeniably changing.
Definitely a key piece of the puzzle.
Okay, let's unpack this then. Bitcoin's truly been on a wild ride, and we're starting with some absolutely staggering numbers.
Yeah, the ETF inflows have been something else.
Right. We've seen spot Bitcoin ETFs record a phenomenal $2.9 billion in inflows, and that's over just 13 consecutive days.
13 days straight. That consistency is notable.
It really is. And BlackRock's iShares Bitcoin Trust, IBIT,
everyone's watching that one.
it alone pulled in over $2.6 billion. And get this, it's now soared to become the fourth largest ETF globally.
Fourth largest.
Yeah.
That's incredible penetration in such a short time.
It really is. And this institutional frenzy, it's even outpaced gold ETFs by a massive $4 billion.
$4 billion more than gold ETFs. Wow.
Yeah, which clearly signals Bitcoin's growing role as maybe a macro hedge.
It strongly suggests that, yes. And analysts are even predicting Bitcoin could test $120,000 if these kinds of flow trends continue.
$120,000, quite a prediction.
It is, but what's fascinating here is how these inflows reflect. Well, it's more than just numbers. It's a broader shift in investor confidence, maybe even a generational reevaluation.
A reevaluation of what? Like what makes a reliable store of value?
Exactly. In this, volatile global economy, gold's been the standard hedge for centuries, right?
Too, yeah.
But for Bitcoin, a digital asset, to actually surpass gold ETF inflows by such a margin, it suggests major institutions are now putting serious capital behind this idea.
The idea that digital scarcity might be a better hedge now against things like currency debasement or geopolitical instability.
Precisely. It signals they see it as potentially superior in some ways.
That's a powerful shift suggesting real maturation, like you said.
It seems so.
And that maturity, it's really put to the test when global events shake the market, isn't it?
That's the true stress test.
Right. And here's where it gets really interesting. It's resilience when tested. Remember when it briefly dipped? Down to $98,200 after those U.S. airstrikes in Iran.
Yeah, there were definitely some market jitters then. A bit of a shock.
Shock, yeah. But it didn't stay down long. It roared back to $107,400 by the end of the week.
A very swift recovery.
And that recovery, it seems it was fueled partly by easing tensions, but also a surge of positive sentiment on X. You saw that hashtag cryptorally trend?
I did see that. And the reported sentiment.
Reportedly 68% positive sentiment.
Wow. So if we connect this to the bigger picture, it highlights Bitcoin's robust bounce-back ability. Almost like the market just processed the news and moved on.
Shrugged it off, almost.
Kind of, yeah. Even when faced with that sudden geopolitical uncertainty, it showed a strong capacity to recover. It suggests maybe it's developing a kind of immune system for these shocks.
An immune system. Interesting way to put it.
Well, it speaks to increasing investor conviction, right? And maybe a more sophisticated understanding of Bitcoin's place within the broader financial ecosystem. It's not just reacting wildly anymore.
Okay, so given this resilience, this institutional embrace we talked about, what does all this mean for the regulatory side? Those tailwinds we seem to be seeing.
The regulatory angle. Always crucial.
Definitely. We saw U.S. lawmakers advance the Genius Act recently. That aims to license stablecoins.
Right, which isn't directly Bitcoin, but it matters for the whole space.
Exactly. It creates a clearer framework for the broader crypto ecosystem, which, indirectly boosts Bitcoin's legitimacy. It reduces that overall market uncertainty.
A rising tide lifts all boats, potentially. Less regulatory ambiguity is generally seen as positive.
And we also saw Senate Republicans unveil their crypto market structure principles, aiming to define how digital assets are classified and regulated.
Which also helps ease those lingering regulatory fears, doesn't it? Providing some kind of roadmap, even if it's just principles.
It does. And then there was that detail, which certainly fueled some bullish sentiment. Trump's reported $2.3 billion Bitcoin reserve at Trump Media Tech.
Yeah, that made headlines. Quite a significant reported holding.
And Bitcoin held steady above $107,000 around that time, too.
This raises an important question, though. about how these legislative signals, and frankly political signals like the Trump holding, might shape the future perception of digital assets.
How so?
Well, we're seeing them move pretty decisively, it seems, from the fringes more into the mainstream consideration. That reported holding, for instance, isn't just a number.
You mean it signals something more?
It could signal a remarkable shift in political, perhaps even traditional conservative viewpoints on digital assets. It might pave the way for broader acceptance across different demographics, different political spectra.
Interesting point. So, okay, let's try and sum this all up for you, the listener.
Yeah, the key takeaways.
Right. First, we've seen this undeniable institutional embrace shown by those record ETF inflows.
Can't argue with those numbers.
Second, Bitcoin has really proven its resilience, bouncing back strongly even when faced with volatility and geopolitical shocks.
Demonstrated strength, definitely.
And third, there's this growing wave of, let's call them supportive regulatory movements, or at least movements towards clarity, creating a potentially more stable environment.
Regulation is slowly catching up, providing some structure.
So thinking about all that,
Yeah.
what does this trajectory imply? Maybe for traditional finance, or perhaps for how you, listening now, might view the future of digital assets and their evolving role in the global economy. Something to consider.